Swati Kank lives with 3 generations of her family in a slum in Pune, a few hours outside Mumbai. Several years ago, after getting treatment for a back injury, she found herself having to borrow money from neighbors to settle huge medical bills.
तिथे जास्त पैसे जायचे ना, म्हणजे आता कळायला लागलं की आरोग्य निधीमध्ये भाग घेतल्यावर थोडे का होईना पैसे आपले कमी होतात किंवा चांगल्या डॉक्टरांचं मार्गदर्शन मिळतं आपल्याला. तसं तिथं म्हणजे पैसे ते म्हणतील तेवढे कसंही करून द्यावेच लागत होते. वाटतं ना की कसं वेळेला 2 पैसे कोणा मदत मिळते, मार्गदर्शन चांगलं मिळतं.
Swati is one of millions across India who has little or no access whatsoever to any sort of financial security. But it is partly because there are so many underdeveloped places like this one in cities and in rural areas that India has now become a leader in providing basic financial services for its poor, such as microinsurance. Over the past 5 years, the number of poor people with some form of insurance has increased 4-fold to over 300 million in India. In 2010 alone, insurance targeted at the low-income sector grew by 39% for both state-run and private companies. Experts put the rapid growth down to a combination of reasons.
Well, there were multiple factors that helped microinsurance in growing and flourishing in India. One, of course, was the fact that there were a lot of people who were eligible for microinsurance. This was helped along by the fact that as a part of the licensing criteria, the government mandated that a part of the business for both life insurance as well as for general insurance came from what is called the rural and social sectors in India.
Beyond the government's initiative, investors have been attracted by the huge potential market that India offers.
Microinsurance we look at as an opportunity to grow because India is a very vast country, there is a huge potential. Insurance is a game of numbers. Insurance is a game of large numbers in fact. So our strategy is actually to spread the insurance across the geographies, diversify with the products and make it sustainable with the use of technology.
But a profit-driven business isn't the only way to provide sustainable financial services. In this slum, the community pools together a mutual fund that serves as insurance for its members.
Before going for a community-based model, we also looked into if anything could be done with the traditional insurance model where there is an insurance company who provides direct benefit in case of health incidents. But when our member asked the insurance company that, okay, if I do not fall ill, what happens to my money? And that guy said, that is my profit. It cannot be returned. So that was a trigger point when our community started deciding that there is no incentive in being healthy if we go on with the traditional partner-agent model. So let's go for a model where the community can pool in the risk, and if they remain healthy, the profit will be in their own hands. It will not go into somebody else's pocket.
But services like these don't always reach all communities in India, especially in rural areas. According to government statistics, 800 million people still live in villages in India, and nearly half remain below the poverty line, as does nearly a third of the urban population. Some people find it distasteful that companies are trying to make a profit from the poor. Microfinance lending, for example, has drawn its fair share of criticism recently. Microinsurance also has a long way to go. In this village, for example, nobody has any sort of cover. But it is doing its part to help India's rural and urban poor provide for themselves in a country where welfare can often be inadequate. Kanupriya Kapoor, Financial Times, Maharashtra.